This is the basic definition of price action trading. When traders make trading decisions based on repeated price patterns that once formed, they indicate to the trader what direction the market is most likely to move. As you know, price action traders rely heavily on technical analysis tools. We're talking charts, candlestick patterns, trendlestick patterns, trend lines, support, and resistance levels. The whole arsenal. The philosophy behind price action trading is that all the underlying fundamental factors influencing the market are already baked into the price itself. However, there's one piece of the puzzle that shouldn't be completely ignored. Major economic news announcements. Think interest rate decisions, non-farm payroll data, farm statements. These can have a significant impact. In my experience, economic news can be both a friend and an enemy for your trades. Let's break it down. Imagine you have a trade lined up positioned to benefit from the outcome of an upcoming economic news release. If the news hits and aligns with your prediction, you're looking at potentially significant profits in a short time frame. Economic news releases often trigger major price movements up or down due to the surge in volatility. This volatility can be your friend, pushing the price in your favor and leading to a quick win. Now flip the scenario. Your trade goes against the news. The market reacts opposite to your prediction. In this case, you risk having your entire profit wiped out or even facing a significant loss. Remember, news-driven volatility cuts both ways. Prices can move so fast that your stop-loss order might not even get triggered, leaving you exposed to potentially heavy losses. Now let's look at this chart showing us exactly what can happen when there is major Forex fundamental news release. This is one experience I will never forget. I traded a perfect price action setup. The trade went as I anticipated, but a few minutes later the market dropped down very quickly. My stop-loss was never triggered at the price level where I set initially. I tried to close that trade as many times as I could, but it was impossible to close because the price was way down below where my stop-loss price was. Price jumped my stop-loss. I just stood there and watched helplessly. After what seemed like an eternity, the trade was closed by broker at the worst possible price way. Way down below. That single trade nearly wiped out my trading account. Instead of losing 2% of my trading account, I lost almost half of it. I did not understand and did not know what happened that night to make the market move like that. I could not sleep that night. Later I found out that it was a major economic news release that moved the market like that. Now before I place a trade, I head over to this website here to check the news calendar. Now while trading and I notice a valid trade setup, I firstly look at my news calendar. If I see that the time is close to a major news to be announced, I will not enter. There are exceptions where I will take a trade if I see that I can place my stop loss behind a major support or resistance level. The high-impact news are color-coded in red. That's what you look for on forexfactory.com. So how do you use forexfactory.com? Here's what you can do. 1. If you find a valid trade setup happening, check with forexfactory.com to make sure there are no major news announcements to be made soon that can impact your trade. 2. If there's news to be released, you can do these two things. Don't trade until after the news release and wait until market starts trading normally again. If you decide to trade small contracts because the market is very volatile when the news is released, this can work for you or against you. You need to know what you are doing during these times. 3. If you already have a trade that has been running prior to the news release time and you are in profit, think about moving your stop loss tighter or taking some profits off that table in case the market goes against you once the news is released. In an ideal case, you would have taken your trades a while ago so that the current market price is far away from your trade entry price, and you would have locked in some profits already. If suddenly there is news release and the market moves in the direction of your trade, you will make a lot of money. There are so many trading strategies, but one of my very best is the price action trading strategy. Price action trading allows you to trade with an edge. So what's really a trading edge? Well, put it in simple terms. You need to trade when the odds are in your favor. You trade with the trend. You trade with price action using reliable chart patterns. You trade using support and resistance levels. To keep yourself profitable, you make your winners larger than your losing trades. Trading only in larger time frames. Waiting patiently for the right trade setups and not chasing trades. All these I just mentioned earlier helps you to trade with an edge. They may not be exciting, and probably you've heard of these before, but hey, this stuff is what separates winners from losers. Price action trading will not make you rich. Yes, it won't. I know all of you think once you know price action trading, the money start pouring in. Well, that is not true. Price action trading can make you rich and profitable if only you master risk management alongside with it. Some of you will go through this video and learn and make much money, but some of you will fail. That's just the way life is. Here's one thing about price action. It represents a collective human behavior or mass psychology. Let me explain. All human beings have evolved to respond to certain situations in certain ways. And you can see this happen in the trading world as well. The way multitude of traders think and react form patterns. Repetitive price patterns that one can see and then predict with a certain degree of accuracy where the market will most likely go once that particular pattern is formed. For example, if you see a major resistance level, price hits the level and forms a shooting star, which is a bearish reversal candlestick pattern. You can then say with a greater degree of confidence that price is going to head down. The question is why? Because sellers are all watching this zone. They see the historical rejections, and they can also see the shooting star or bearish reversal candlestick formation right here. This tells us one thing. Sellers are likely waiting to pounce. The best zone to place a sell trade is at a resistance level. At this level, sellers will be looking for signals to sell. They will be waiting with their sell orders, not just one sell order, but thousands of them, some small and some big orders. But hold on, it's not that simple. On the other side of the coin, you have traders who bought at a lower price, and now that the price is heading up to our resistance level, that's where most of their take profit levels are. So once they take their profits around resistance levels, that means there are now less buyers now and more sellers. The balance tips in the direction of the sellers, and that's how the price is pushed back down from a resistance level. Price action is a representation of mass psychology. The markets are moved by the activities of traders. Price action trading is about understanding the psychology of the market using those patterns and making a profit as a result. Thank you for watching. Please do like, share, and subscribe for more educative videos. Don't forget to comment your thought on today's video.